The two-day FOMC meeting kicks off next week, and we'll finally get the answer to the question, will the Fed taper? I'm here with Jim Cramer. Jim, the labor market and economy have been recovering, but at a slow pace. Many expect the Fed to taper next week. What do you think will be difficult for them to do so at this point?
I just think that you look at those mortgage applications that we have, which were horrendous, and you say, listen, if you were going to taper, this is what you most feared, which is just a shocking decline in mortgage applications. So in some ways, I think they have tapered, and maybe tapering is have the functional equivalent of taper, and that maybe tapering is off the table or small taper because, you know, rates don't trade as if they're going higher here. One of the things that I think is underlying the bullishness, I think people feel rates have peaked for the year, that the 10-year went to 3 and that's all it's going to go up, kind of obviating the need for the Fed to really do anything at all. It looks like the central banks that were selling bonds have walked away. Brazil had been a big seller of bonds, I understand. Chinese, maybe, maybe not. But I just think that this is going to be another reason why people might just say Fed has to be on hold because housing has plummeted. It's plummeted. You know, they kind of accomplished more than what they wanted, I think. Housing employs a lot of people. If we can't get above 500,000, 600,000 housing starts, you know, down from 1.6 million 6 years ago, that's bad for employment. So we had an employment number on Thursday that, you know, it was kind of an inaccurate number. They didn't have all the states. I guess what I'm saying is that taper may be table, but my friend and colleague who writes for us, Matt Horwing, was saying to me, Jim, you know, the damage has been done already. Maybe they don't need to do any more damage.
Mm-hmm. Well, let's say they do taper. Will that roil the markets, or could we shake off yet another headline?
Well, I'm positioning action alerts, Steffi and I, as if the market won't like it, because the market has run up in anticipation of perhaps that there won't be any really good news in the taper. But I've got to tell you, I'm just shocked that the market's climbed this wall of worry. We went from 1.6 bonds to 3, the 10-year, and that would have supposed to send the market back. Instead, you know, off 1.5% from the S&P high. I don't know. I mean, that seems to say to me that the rates are done going up. It doesn't matter what the Fed does.
Right. A lot of people have been surprised about this. Many people talked about a September correction, and yet look at the S&P winning streak that we've seen.
I'm one of those, and I look like, you know, right now I look wrong. I you know, not so fearful as to raise 20% cash for action alerts, but did raise a lot of cash, expecting September to be tough. I'm not backing away from that.
Okay.
And when the market advances, Brittany, it doesn't make me more bullish. I mean, it makes a lot of other people bullish. It does not make me more bullish. That's never been my style. Trading since '79. You know, I'm wary because I think the consensus is building rates are going to go through 3. If they go through 3, it's going to be another setback. It does act like rates are done going up. But I see many shortfalls coming in retail, apparel, banks, and those matter to me. And maybe the industrials can make up for it because of China and the UK really being strong, Europe being strong. But I'm a little cautious ahead of the Fed meeting, even though I think that they have taper.
Especially in an overbought market. Right?
Yeah, it's really overbought. I mean, my rules say when you get +5 on the S&P oscillator, which is what I follow, that means you have to be less bullish. It's just there's been some big moves I've missed because of that. But I've missed some big declines because of it, too.
Exactly. All right, on that note, thanks so much, Jim. I'm Brittany Umar for The Street.